Okay, so welcome to this month's market report. We're going to review November of 2023 versus November of 2024. I'm sorry, November of 2022 versus November of 2023. And keep in mind, the reason we do this is we do our weekly market report every 7 days with the intent of being acutely in tune with what's happening in the market on the micro level, like as close as we can to real time, so we can strategize offers, strategize showings, and strategize pricing based on real-time statistics, or at least as real-time as possible. Then we do our monthly report so that we can kind of take a step back, get a bird's eye view of what the market trends are, so we can see what future trends may be. So we don't want to miss the forest for the trees, but we also don't want to rely just on data that can be a little bit dated. So for example, this is November 2023 and I'm shooting it on December 17th. So this data could be up to 6 weeks old, but it does tell us where the market is kind of moving and what the trends are. So let's dive into the numbers on this and see what happened 2023 versus 2022 and what that may mean as we move forward into the market. All right, so first thing we want to look at is we want to look at the new listings. So November of 2023 versus November of 2022, you can see the inventory was dramatically decreased. And that's what we're seeing across the market. And that's why we're having, even though the total volume of transactions has decreased dramatically to levels that are below even 2008 at the worst of the great financial crisis, the prices are still going up because inventory is so low. So you can see November inventory was extremely low, which is typical for, you'll see a downward trend as we go into the winter months, and you can see we did that last year as well, but we were just significantly lower than we were even a year ago. Number of sales, same, November 2022 was 111, 2023 was 93. So the number of transactions was lower because there was no inventory. So you can't sell something if there's not something for sale. So in general, market activity has continued to go down, but let's see what's happened with the rest of the market. Has it gotten stronger with regards to seller versus buyer market? What's been going on with that? So if you look at November 2023 days on market, properties were staying on the market a little bit longer this November. 2022, they were at 22 days. This year, they were at 32 days. So days on market have been going up a little bit. We've seen that change in the last 2 to 3 weeks. So again, this is all of November. So the first couple weeks in November, interest rates were still kind of climbing a little bit. And then we saw that dip start to happen. So I expect in December, this number is going to actually be a little bit lower. We'll have to see, once those numbers come out. But we were seeing properties sitting on the market a little bit longer because it was slowing down a little bit with the interest rates continuing to go up. Months of inventory. So months of inventory, this is our determination of if no more inventory came on the market, how long would it take to sell through everything that was on the market? Typically anything, sorry about that, got a phone call coming in. Typically anything 5 to 6 months is considered somewhat of a normal market. Anything above 6 months is considered a buyer's market. Anything below that 5 to 6 months range is considered a seller's market. So we've been sitting pretty hard in the seller's market, except for the winter of last year. You can see in October we hit 5 months. January and February we hit 6 and 8 months. November we hit 5 months, so it did go up a little bit. I don't think that's too indicative of anything, but that is what happened with the demand, and that comes along with the days on market sitting a little bit longer. With the interest rates coming down, I've been saying on our weekly market report that there is a window of opportunity right now that I think is going to last through the end of December 2023. But once we hit January of 2024, I expect us to see activity start going up again. So this does indicate that window is present. So it's really a good idea if you're thinking about buying to get out there and get into that right now. Median sales price. So what did median sales price do? November of 2023, we were sitting at 1.1 million. November 2024, we're sitting at 1.2 million. So it's gone up 100,000. What's that, about 7-8%? So that's kind of what we've been seeing. But let's just reiterate how median sales price can be a little bit misleading, even when it goes up. So median sales price is basically when you take a cluster of all the sales that occur and it's the number that fell right in the middle. So in this example, for example, we have month one, we had a $3 million sale, 2.75, 1.65, 1.5, 500, 350, 275, 225, 220. So the median sales price of month one is 500,000. Month two, 4.25, 3.5, 3.25, 2.5, 400, 395, 385, 350, 315. So notice in month two, every one of these transactions was higher than month one. But 400,000 was that median sales price because it was the one that fell right in the middle. So based solely on median sales price, you would say that the market declined because month one median sales price was 500,000. Month two median sales price was 400,000. So therefore the market declined by 20%, meaning in most buyers' minds that you could now get a $500,000 property for $400,000. And that's not at all what median sales price means. It just means that's the number that fell at that point. So this is a good number for overall real estate stats because it doesn't let averages be skewed by high or low numbers. But just keep in mind that median sales price only indicates the buying trend. It doesn't indicate the property value. So for example, when interest rates started going up, the buying trend came down. People were looking for less expensive properties, but that doesn't mean that those property values were coming down. A $500,000 house was still $500,000 or more. It's just more people were buying that $500,000 house because they can no longer afford the $750,000. So that median sales price doesn't really tell us what the price values are. We have to look at each individual property to determine if property values are coming down. Okay, so I just want to make sure that was clear. All right, so the final stat we want to look at is we want to look at list to sales price ratio. And you can see that since, February of 2023, we've been above 100% as far as properties selling at, the list price versus what the final sales price. We've been over 100%. November, we went down to just over under 99.5%, so right around 99.6%. November of 2023, we were at 99.5%. So right on par with that. And again, that doesn't mean property values are coming down. It just means that the market slowed down a little bit. Maybe properties were a little bit higher priced. And so there was some negotiating room on that. But we're talking, 0.4%. So on a $500,000 house, we're talking, $2,000? So there's not a lot of wiggle room on that. Okay, and then one last thing, a lot of people are concerned about prices coming down. I think that concern's getting a lot less now that there's all the news about the interest rates starting to drop and we're seeing the interest rates falling. So buyers are starting to become aware that, this window is closing, so we're getting a lot more buyer activity right now. But just so you can see here, interest rates, when interest rates went up, property values still went up. When interest rates came down, in general, property values came down. When there were recessions, these little purple highlights, property values continued to increase, except for the 2008 to 2010, the great financial crisis, and that's because the real estate market is what caused that recession. In the last, I can't remember the exact number, I have a great graph for this, and I need to put it into this presentation. In the last 80 years, 76 years have been net positive as far as appreciation. Now that might be 0.1%, but it's been net positive. I think 4 years were negative. 3 of those years were 2008 to 2010, and then there was one in the 1990s, and then there was 1 year that was even. So waiting for prices to come down is not really a great strategy because historically, while there are dips throughout the year, historically prices tend to go up even year over year. Now it might be 0.1%, but they're going to go up versus coming down. So that's just something to keep in mind. Historically, that's not a very strong position for you to wait for. Okay, so what does this mean overall? Well, let's go to our flow chart of thought here. So let's look at our flow chart here. You can see that November of 2022 versus November 2023, market activity was down. But even with market activity down, we were at that 5 to 6 month range. So we were in what we call a normal market, which would be normal appreciation. So for this month, we're expecting about a 3 to 5% appreciation. Okay, we will see you on December's market report. If you have any questions, feel free to let us know. Have a great day.